Hello, welcome back. We're super excited to be here. And well, I'm gonna go blink like always. Okay, so now you know the home buying process. You know we issued your prequal, and you're going shopping, and you find the house. So what's the next step? Now you found the house, so you're gonna go under contract, and then once you're under contract, what happens?
So, getting an offer accepted feels like the finish line, but it's actually the beginning of a new phase. In this episode, we're going to break down what happens after a buyer goes under contract. This is going to include inspections, appraisals, earnest money, and home warranties that the buyer should prepare for beyond the down payment and closing cost.
Very well. So then you're under contract, and we're gonna tell you the yeses and nos of what to do, and just a little bit of like the process of what happens when you are under contract. So what's the first thing that once you go under contract, obviously we're gonna call you and congratulate you because it's a really exciting step. Like it's exciting that you found a house, the house that you love, the house maybe with the pool, or maybe it was a house with your dream kitchen, and now the next steps are going to be talking to you are going to talk to the lender again, because we're going to move your loan into the underwriting line so that we can make sure that we approve it. And then you'll be talking to me a little bit, but then on Monica's end, there's also going to be, on the realtor side, there's also going to be steps that you need to do on your end to make sure that the house, that we can get you to the finish line.
Right. So, a typical closing is about 30 days. Sometimes, depending on not only the buyer situation or the seller, it can go up to 45 days. And there's a lot of important deadlines that have to be met because once you go under contract, everything is on a timeline in order to close on time. So it's very important that we stick to the timelines. Myself as your realtor, and even Patty as your lender, we make sure that we hit those deadlines so that way we're not having to extend closing or request more time.
Yeah, and a lot of people, it's a contract. Like Monica says, it's there's timelines, and we have to follow them, because if we don't, then we jeopardize being able to close on time. We jeopardize different things during the process, and we don't want to put anybody in that situation. So we make sure that we try to get everything that we need done in time to get you to that finish line.
Right. And so here we're going to talk a little bit about an inspection period. What does that kind of look like? Financing contingency, appraisal contingency, because that's very important, document reviews, and then finally the closing date. So with that, we're going to go ahead and lead into your earnest money, which is also known as a good faith deposit for the buyer. So typically, once you go under contract, you have 3 days from once it's accepted on both ends. So sometimes, I can write an offer up on Friday. Sometimes, depending, the seller won't respond until Monday. So until both sides agree and sign, that's when day one starts. So from that day, you have 3 days to reach out to title. Will reach out actually, and coordinate with you to make your earnest money deposit.
That is correct. So once you give that earnest money deposit, I know I usually try to, when I make that phone call and congratulate you, I remind you that you need to make sure that earnest money deposit comes out from your bank account. For the most part, like if we're using your bank account, then we need to make sure that it comes out of there. Because a lot of the times, we need to source where that money comes from depending on the amount of your earnest money deposit.
And typically it's about 1% to 3% of the purchase price, but I'm very good at getting even lower ones. Sometimes I'm able to get a $500 deposit, and that helps the buyer out a lot, especially if they're using a down payment assistance programs, because that means they don't have a lot of cash on hand. So that definitely helps. But one of the bigger questions, Patty, is what happens to that deposit?
That deposit gets sent to title, and they hold it there. And that money, depending on, your situation or how we're doing your loan, it's going to be deducted right now in the market that we're in. We're deducting that from your down payment. So then it gets credited towards that at the time that we close. And so it's not money lost. It doesn't, as long as your loan closes, it doesn't get lost. Like it doesn't go to the seller or anything like that. It's held in an account with title, and we use it towards your down payment.
Right. Because I know that's a lot of questions that sometimes first-time home buyers have, but it's something that, we discuss and we let them know. But that money does go towards your down payment. In certain cases with down payment assistance, sometimes it does come back, but everything just depends. Every transaction is different because sometimes even so, they need to put a little bit more when it comes to closing.
Yep. And it'll depend on how much closing costs we get and things like that during the process. But sometimes too is because you are paying for your appraisal, sometimes too you get that credited back. So it just depends, like Monica said, if we're using down payment assistance, if you're putting your own down payment, then usually depending on the amount of your earnest money deposit, like you might get some of that money back, like if you paid once you paid for your appraisal. And
then another big question a lot of people have is like, can I lose my earnest money? And the answer to that question is yes. It just depends. Again, every transaction is different. But sometimes, you can lose it if the buyer backs out after deadlines without, a proper reason to, void the contract. And it has happened because sometimes the buyers fail to meet obligation. One big thing is not getting docs to the lender on time because the seller can say, hey, what are you guys doing? You're not doing your job. So, we elect to cancel because of this. And it has happened. So that's why it's very important that when the lender does ask for documents, that you get those over to her as quickly as possible.
And sometimes too, Monica, people just get cold feet. It's not even like the documents. It's a big purchase, and that's why it's really important to meet with your lender, meet with the realtor. Communicate and talk, and it is a big purchase, and it can be scary, and people do get cold feet, but you're investing in your future. So you're like purchasing a house. It's a good thing. Like it's positive. It's like one of the best investments that you can make. So that's where we come in and we, talk to you, remind you. And again, even if you still have the cold feet and you decide that, it isn't for you and you don't want to proceed, then that's when usually people could lose their earnest money deposit. It's, for that reason. It's not that, your feelings aren't validated or, your decision isn't validated. It's a contract. So that's very important that you remember that you're under contract and, the seller signed, you signed, and now you're saying that by giving that earnest money deposit too, it's like money, it's saying like good faith. Like you want to buy this house, the seller's putting it off of the market because they're, agreeing that you're going to buy it. And so I think that's kind of part of the whole earnest money deposit and part of the process that, people need to know is that it is a big thing.
It is. And, some of the other ways, like you said, depending on where you're at in the contract, absolutely, they can lose it just with the cold fee. Now, there are like little ways and things like that. But I mean, those certain reasons are like, serious inspection issues. I know we talked about in the first episode, like Arizona is an as-is state. That means that the sellers do not have to make repairs. I mean, yes, we as buyer agents, we put in a repair request form, but again, it's just a request. So like if things are so major, you can say, hey, I don't want the house. I want my earnest money back. You'll get it. Another one is, appraisal issues. Let's say, it comes in low, and we'll talk about that a little bit later on, but that's also a way. And the last thing, which we hope never happens to any of our clients, are financial issues. Like let's say somebody was laid off. That's a valid reason.
Yeah, and for sure. So, and that's why we say it's not lost. If it's a valid reason, something happened, you either, let's say you were putting your own down payment and an emergency happened, like a medical emergency happened in your family, and now you had to use it for that. And these situations do come up, and we've had them come up. So it's very important for you to communicate and let us know as soon as possible if there are any changes while you're under contract, that you communicate, you let us know. We're going to try to figure out a way to save you your money and to make sure that you close if that's still something that you want to happen. So very, very important. Always tell us everything. It doesn't matter how bad you think it is or what it is. Just, let us know.
Yeah, that'll lead into, a little bit about inspections, why inspections are important. They're not obligated. They are highly recommended. Every single one of my clients will get a home inspection. And this is just for your knowledge. Again, Arizona is an as-is state, but that doesn't mean we don't fight for our buyers. But, it's going to give you a little history too. They're going to check the roof, the HVACs, foundation. They're going to look for termites. If you need a pool inspector, sewer scope, mold, those are very important things. They're going to check the windows and doors because they want to make sure, your home is good. And most of the times it is a visual inspection, but it just depends. There are 100 of inspectors out there, 100 different gadgets they can use. And that takes place in the first 10 days. So you have until day 10, and these are, calendar days. So Saturday and Sundays count, to get that inspection done and also get out that repair request.
After the inspection, Monica.
All right. So after the inspection, we're going to do a BINSR, which is basically a repair request. And I do not know the words for that, but that is an acronym. Buyer inspection, BIN. I don't know. Sorry. Something response, seller response. But we can look it up. We can, because I just filled one out this morning for a client. But basically, at that point, we're going to request repairs, and these are going to be major ticket items. When you get that home inspection report, it's going to have everything, anything from a chipped cabinet to, maybe a drawer not closing properly. But we are looking for major items. And one of the reasons, too, is because, as a buyer's agent, if you put a lot of the little stuff, the seller's going to be like, well, I'll repair the little stuff and I'm going to leave you the bigger stuff. So it's very important, especially for me, to explain to my clients, major ticket items, roof, AC, plumbing, make sure that the doors and windows are opening and closing properly, things like that. Unless there's like a huge, like I saw in one property, like a bunch of the tiles were cracked and broken on the kitchen floor. But if it's like a couple little like chips and things like that, not so much a repair request, but just for like a knowledge. So what that does, let's say more than likely, if it's major ticket items, sellers do fix it because they know they're going to have that same issue with another buyer. Because like I said, most buyers are going to do that inspection for their own knowledge. So they either elect to repair it and pay, or they offer credit. And sometimes that's great because sometimes when we negotiate, sometimes we don't get what we actually need for our clients, but this is another way for us to help them with getting extra credit. And that's perfect for Patty.
Yes, it is. I do want to say, though, right now that we're talking about these inspections, that, I purchased my house a few years ago. I still have the book with the inspection, and I have never repaired anything on that list. And maybe one thing, because it was years later. But yeah, just so you guys know, But I did get it done. So once we get that credit, there is different ways that we can apply it. I know a lot of the times on your end, Monica, or I guess I'm going to backtrack a little bit. That BINSR, as a lender, we never see it. Like we don't know. All I know is that Monica takes care of it. And then if we get some credit back, and she's not able to use it on her end, because I know there's ways that you guys can do things, for that. But if she can't, and she says, hey, Patty, we got extra credit, for closing costs, then at that point, I'm able to apply that to either closing costs. If I already have too much closing costs and I don't need it, then usually if your property has, HOA, we can use it to pay up your HOA for a little bit longer, which we have done with many of our clients. Is when we do have credits left, we do use it for that. We also use it for, let me think, increasing like the home warranty, getting a better home warranty. Just different little things like that.
Buy down the rate.
And we can buy down the rate too if we need to, or sometimes, figure out if maybe a different type of, loan program will work better if we have a lot of credit, where we can do like a buy down, or do like a 1 to 0 buy down, or just different things to try to help you out, to, use up that credit. Cause Monica already fought for it and we don't want it to go back to the seller. Sorry.
Right. And worst case, if we have enough, and it happens, we've had enough for closing costs, we've had enough for HOA, we've had enough to buy down the rate. Whatever's remaining, we'll use it as a price reduction. We try not to lose out on those credits for you as a buyer, because, we work hard for that and we work hard for you. So, even if it's a little, I believe we did like just a slight $2,000 price adjustment, but hey, that's $2,000 less that you're going to be financing. So I'm happy with that.
Inspection period is passed and we got credits. The next thing that happens is Monica will let me know, hey Patty, okay, we're good to schedule the appraisal. So the appraisal, we schedule the appraisal. The buyer gets a link to pay for it. Once it's paid for, you will get it scheduled. They'll contact you and you schedule the appraisal. They're going to come out to your house, and usually I tell my buyers, somebody has to be there to allow the appraiser to come in, and it usually takes anywhere from like 30 minutes to 40 minutes. It's not a very long time that they're there for. And the once that happens, then we get the report back. And then as long as your house appraises, then we're good to proceed. If it doesn't appraise, then usually, I'll go back to Monica, let her know, and then
we negotiate again depending on where it's at. So, if the appraisal comes in low, what happens? So one is the seller can lower the price to that appraised amount. And why is that? It's because a bank is not going to issue a loan for more than what the home is worth. So that's very important, because sometimes it gets a little muddy on both ends on why that happens. But that is, option number one. And leads into the second option. The buyers can bring in the additional cash.
Okay.
So like, let's say it's a $10,000 difference and they really want that home. Some buyers, I've had a buyer, not that amount, but I've had a buyer come in out of their own pocket to make up the difference because they really wanted that home. Now, this one we're talking about, I think it was $1,000 difference. It appraised for $1,000 less. And the seller didn't want to come down just because they had already gave so much credit. They fixed all the repairs, So my buyer was understanding and he paid that difference. So, So when it appraised for less than what it's worth, the buyer has the option to come in. But again, it has to be cash. It can't be rolled over into the loan. So it's going to be a part of your additional closing cost.
Is because the bank wants to make sure that what they're letting you borrow is like the home value's there. So that's why we get the appraisal done. And then usually I'm the one that orders it, and, you pay for it. And like we said earlier, if we have enough closing costs, and then that's something that you could get back to in return, like once you close.
Yeah. And then the other thing too is like sometimes buyer and seller are willing to, split the cost, again, just depending. But ultimately, like if they cannot agree, the buyer can elect to cancel. And this is where you would get your earnest money back, because you're not going to be forced to purchase a house that is, higher than what it's worth, unless you're willing to do that. And so that's a great option too.
Yeah, and it doesn't usually happen very often that, a seller will say no unless that appraisal comes in like super, super low, which I've had happen. I've had happen where it came, I want to say it was like 20,000 less, and the seller, because they were already helping with a lot of, closing costs and things like that, they decided to cancel. So then what happened after that? My buyer ended up, just looking for another house. They got their earnest money deposit back and, used that towards their next contract. So the next house that they found.
Right. But you as a seller, let's say it does come in low, you have the right to challenge those appraisals, because sometimes they're not just. I had a friend of mine, an agent, similar story. She called me like, hey, just tell me about her day or her week. And, her seller's appraiser came back 25,000 less, and her seller felt like that's not right. That's not fair. Like I've seen the other market. She's an investor, so fix and flip. And so she challenged that appraisal. And, the second time around, the appraisal came back in her favor. I mean, it wasn't, the price that she wanted, but it still, I think it was like 5,000 difference. And at that point, she was willing to eat the cost to sell the home, because from 25 to 5, that's a big difference. So, you do have the right as a seller to challenge that appraisal but at that point you're paying for that. The buyer's already paid for theirs, so if you want to challenge it, that's a fee on your end and not the buyer's.
That is very correct. We did do that in my case, and it didn't work out.
So, after, you have your inspection, you have your appraisal. One thing that we as agents too negotiate is a home warranty. Now, the home warranties, there's a lot of what they cover and what they don't, but it gives, I feel like it gives my buyers a little bit more, like, what's the word I was looking for, like a little bit more security, having that home warranty, because, it is a resale home, but even new builds, they're not perfect. They're going to have their little defects and things like that, but at least this year, for that first year, you're going to be covered with that home warranty, and they'll, help with certain issues, and, they won't charge you as much as if you don't have that warranty.
For the appraisal, Monica, there's some properties and there's going to be some instances where an appraisal is not required, like depending on the person's credit and depending on how much they put down payment. Sometimes some people do get appraisal waivers. So just a little, info there on that part, that it could happen. And then it would be up to you as the buyer to decide if you want to have that appraisal or if you don't want to have the appraisal and just go with, the appraisal waiver.
Oh, okay. See, learning something new too. The home warranties, normally, that's going to cover, your HVAC, plumbing, water, electrical, kitchen appliances. One thing some of them won't cover it, and, later on we're going to have a guest come in and talk a little bit about that. But so this is just like a quick overview, but this is what's going to be happening while you're under contract, pre-existing condition, normal wear and tear that falls out of the contract. And this is something that normally, we negotiate and the seller pays for it. So, that, saves our client about $450 and above, depending on the tier of warranty that they get. So, I mean, that again is another, part of the closing cost, but that the seller, helps out, for them too, because the same thing, a lot of the sellers want the people coming into their home to feel, secure and happy with the purchase of their home. A lot of them don't want them coming in, feeling terrible about their purchase.
Yeah. And the neat thing about the home warranties, Monica, is that sometimes you can, once you make your purchase or the contract, you can get it for a year, you can get it for 2 years. And then once that time passes and it expires, then you're able to renew it and pay for it out of, your own pocket and be able to continue to renew it. So you can keep that too. Like, it doesn't mean that because, the seller or Monica or whoever ended up paying for it, paid for it, that's it. Like, you don't have a home warranty once the time passes.
Right. And they normally will reach out. They'll reach out about your extended car warranty. Just kidding about the home warranty. That's a little inside joke.
I was going to be like, Monica, car.
No, everyone at my husband works for the dealership, so we always get those phone calls like, have you heard about, or have you extended your car warranty or whatever? Yeah. So the same thing with the house though, no, but it won't be an extended one, but they'll definitely reach out and let you know, hey, your warranty is coming up to an end. Like, they'll tell you a little bit about the benefits again, if anything's changed, because, everything changes consistently. So, they'll let you know if anything's updated and things like that.
Yes. And then talking about everything changes, everything does change, people. So when you're ready to buy, make sure you buy, because 3 months from now or 6 months from now, guidelines or things can change, and then maybe you won't qualify.
And that's a bit off topic, but I'm gonna hit on that one.
Me always.
I'm gonna hit on that because this past year for DACA recipients, it changed. They are not allowed to use an FHA loan anymore, and that changed a lot because we work with a lot of clients, and some of them were on the fence about it, and now they have to do a conventional loan, and the criteria changes drastically for them. Yeah. It's not like so much tougher, but it is a bit tougher. So with that, like, just agreeing with you, like, I always tell people, they're like, when should I buy? You should buy when you're, able and ready to. Don't time the market, because things will always change. The longer you wait, the more opportunities you miss, especially if you're able to.
There's so many people, Monica, that, back in, before the house prices went up, they had already gone up a little bit, but not, as much as now. And that they missed out on that opportunity to have been able to purchase at that lower price with the, lower credit. We have friends that, were ready to buy then and they didn't. And then they ended up buying, 2 years ago when, the market was a little bit different. But it's super important that, like we always tell you guys, when you're ready and when, you qualify, that's the time to buy. Like, we always go over, your payment. So if you're able to make that payment, then go for it.
Right. And I mean, it still happens today. We have a lot of, people apply and then they want to wait, which is perfectly fine. But don't miss out on the opportunity, honestly, because, things change. A lot of people are, again, this is so off topic, but that's fine. That, they're waiting for the market to crash. It can't, because so many people have invested in these new prices. They just can't. The prices are where they're at. They might trickle down a bit, don't get me wrong, but it won't go back to where it was in, 2019, 2020 prices. So don't miss out. All right, back to our topic.
Okay. But this is us, though. This is how we function. This is how we go, but we're still closing, though. That's the important part.
Yes.
Even though our brains, sometimes we're like, oh,
Squirrel.
I always say, I always say squirrel.
But so now you're under contract. So now you've done your earnest money. You've done your inspection. Appraisal has been done. Patty has reached out with any missing documents that she may need. And so now we get a CTC, and that means clear to close. And I'm going to let Patty explain what that means, because that's great news for us.
Yeah. So once we have the clear to close, we give you that call again, and we're like, okay, the underwriter, everything went through. You didn't end up, doing things that you shouldn't have done while you were under contract, like opening new lines of credit. You don't want to do that. You don't want to co-sign for anybody. You don't want to go out and buy a new car. You don't want to change jobs. If, there's been, you don't want to change jobs. Like, that just keeps it easier, and you're going to close sooner. Now, like we said in the beginning, if anything changes, it's super important that as soon as it changes, you contact us, because a lot of the times we can save the deal. But if we don't know and we're at the end of the table here and trying to close, then that might make it a little bit more difficult. But, as long as you don't do those things, and I always tell people, if you want to make purchases or you want to open new lines, wait until you have keys. When you have keys, that means that, you got the clear to close. The title was able to record with the county, because what happens after you sign, we have to wait for title to tell us, that they've recorded. So then that means that they have changed the name on the title to your name. So then the seller's no longer the owner, and now you're the owner, and now you can have the keys to your property, to your house. So it's super important that you do not do any of those things that I mentioned. Also, another one that I missed was, no big cash deposits, which, you're going to talk to the lender about those things, even while you're, in the process of being under contract, and we're, trying to get your loan, the final approval. So super important that you don't do those things. No new lines of credit. Don't be applying for credit. Because what happens is that sometimes some people don't go under contract right away. When I pull a credit report, the credit report is only good for 90 days. So once that 90 days hit, and let's say that that's when, you went under contract and you're going to fall in that 90 days, we have to repull credit. If you were out there applying for new credit lines or credit cards, or let's say you missed a payment, like super important too, don't miss any of your payments, because then at that point, I have to rerun your credit. And if your credit score decreased, there's a possibility that maybe you won't qualify for what you were qualifying for when you were under contract. And also, like, the job situation too. Like, maybe if they decreased your hours, well, now you don't qualify for that. So, and a lot of people think that because, now I'm under contract, now, it's approved. No, like, they still have to verify your employment. We still have to verify, whatever money's in your account. We still have to, make sure that credit's good. So that's why we tell you, don't make changes. They're still going to verify. And so.
Right. No, and that's so true, because it has happened, and sometimes we need, to request an extension, just for things like that. So it's super important, like Patty says, the do's and don'ts, while you're under contract. And I think that's super important, because we've had it happen to us where people do things that they shouldn't, and they fall out of contract. And it's not fun for anyone, especially the buyer, because, they lose their house.
Yeah. And I don't like to tell people, like, sorry. I mean, thankfully I haven't had it to do it. I haven't had to do that very much. But yeah, it happens. Mm-hmm. And I've seen it happen, like, even with other, people that I've worked with, situations with them of their clients, like, changing jobs, or they stopped working because they thought that, oh, okay, now I'm approved, but they weren't really approved yet. They were just under contract. So super important that.
Yep. And then one of the other last things that we do on my end is we're going to do what's called a final walkthrough. Now, this is super important because before you sign, we're going to walk through the property one last time. And this is just to confirm that the home is in the same condition as it was during the inspection period. So that means if you had doors in every single room, that all the doors are still there. You know, it's super important, especially, you know, sometimes, you know, appliances are part of the negotiation process. So we want to make sure those appliances are there. And also, the main reason is like to make sure that any agreed upon repairs have been completed prior to signing. Because once you sign and it's signed, sealed, and delivered, you are now the new homeowner, and we just don't want to, you know, put you in a home where the repairs haven't been because the seller agreed to those repairs. So that's super important to do the final, you know, walkthrough, make sure that everything is there, everything's been repaired, and everything that we agreed upon in the negotiations during the contract are taken care of. And then, as Patty said, next is closing day. And that's the super exciting day. That's the day when we bring all of our little stuff and we come to celebrate with you guys. And it's something that I absolutely look forward to. I love closing day. I love doing all my little shenanigans because I do everything myself and I'm proud of that. But I like to do it. It's entertaining.
She does. She does all her decorations, and she's always sending me little videos of, you know, her progress when she started, and, you know, it's pretty cool.
As you can tell, Patty's my best friend, so like she has to tolerate me and all my shenanigans.
Oh my gosh, but it is a really rewarding day, Monica. Like, it's a rewarding process. Like, I love doing what I do. I love helping families qualify. I love it when somebody comes in and they don't even know where to begin, and we go step by step and explain everything to them and get them to the finish line and get them to the day that, you know, you get to get them keys. And like I said, I'm going to do better. I've been doing better this year, and I want to be there because it's really nice to be able to see that excitement, the happiness, like you know, that they accomplish that goal of being a homeowner. And I believe that if you want to be a homeowner, then, you know, it's possible. It's possible for the person that wants to do it, even if it's, you know, you're not ready right now or you are ready right now, and, you know, you close and you're ready in 30 days and you close in 30 days, and or even if it takes you, you know, 3 months, 6 months, 9 months, a year. Like, I really believe that if you want to, we can make it happen.
Yes, absolutely. And the same thing. Like, I love my job and I love closing day. I look forward to it. I get super excited. This last one that we did was for the family out in Buckeye. They were referral. They got denied by the new build, but, you know, Patty was able to get them approved, and we still got them everything that they would have gotten with the new build. So, you know, for being like told no again, you know, we were able to make it happen, and they were super excited, and they had a young son with them. So cute. And, you know, I love that feeling. I love the feeling of getting the keys. I like, you know, them seeing all the little stuff that we get them. And, you know, they're just super grateful.
Yep.
I guess the episode takeaway again is going to be, you know, being under contract is exciting, but preparation is what gets you from signed offers to successful closings. Understanding inspections, appraisal, earnest money, and hidden costs help buyers to protect their investments and avoid surprises. So we want to thank you guys for joining us for this is episode 5 now. So yay. I'm actually staying on track for once in my life.
Oh my gosh.
But we will
a little bit, Monica.
A little bit. We're getting there though. It's getting better. But we'll see you guys next week. You know, we're going to see what our next episode brings because we just plan these, you know, weekly. So we'll see you guys next week. Thank you.
Thank you. Bye.
And don't forget to like, share, and subscribe. We got to bring in Patty's daughter so she can do our little outing.
She's at her cousin's. So
she missed out. Yeah. No, next time.